Tomorrow is a huge day for the stock market. The Federal Reserve is about to announce its rate decision, and that single moment could decide whether markets push higher or pull back fast. So in this video, I'm breaking down two possible scenarios. The four stocks I'll add to if the market moves up, and four LEAPS setups I'm watching if the Fed surprises the market and we drop. Quick reminder. This is not financial advice. I'm just sharing what I'm personally doing for educational purposes. Right now, the portfolio just hit new all-time highs, which tells us momentum is still strong. But days like tomorrow can change sentiment instantly. That's why preparation matters more than prediction. The Fed's setup markets are heavily pricing in a rate cut. Odds are high. But what really matters is forward guidance. If the Fed hints that cuts slow down in 2026, we could see short-term volatility even if rates are cut tomorrow. And keep this in mind, next week we also get unemployment data and CPI, which means volatility likely doesn't end tomorrow. So let's talk strategy. Scenario 1, market goes higher. If we get the rate cut and supportive guidance, I expect a slow melt-up, low volume, steady grind, and new highs. In that case, I'm focused on cash-secured puts, not chasing price. Stock number 1, SoFi. If SoFi holds strength, I'm selling puts below current price to get paid while waiting for shares. This keeps risk defined and lets me scale into a position I'm already bullish on. Stock number 2, Iron AI infrastructure. Iron is building a strong base and showing improving momentum. If the market stays green, I'll stick with conservative puts below support, steady income with downside protection. Stock number 3, Robinhood. Robinhood has been one of the strongest momentum names in my portfolio. If price continues higher, I'll add exposure through puts instead of buying shares at elevated levels. Stock number 4, Palantir. If Palantir pushes into the next resistance zone, puts make the most sense. I'm comfortable owning it lower, but I'd rather get paid while waiting. Scenario 2, market pulls back. Now let's talk about the downside, because this is where LEAPS become powerful. If the Fed disappoints or guidance spooks markets, I see pullbacks as opportunity, not panic. SoFi LEAPS. If SoFi pulls back into prior support, I'm looking at long-dated LEAPS to capture a rebound back toward the 50-day average. Iron LEAPS. Iron is volatile, and that's exactly why LEAPS work well here. A dip into strong support could offer massive upside on a recovery move. Robinhood LEAPS. For Robinhood, I'm waiting for a deeper pullback before touching LEAPS. If it reaches that level, the risk to reward becomes very attractive. Palantir LEAPS. Palantir would need a sharp move down, but if it happens, that's a setup I won't ignore. Long-dated contracts give time for price to normalize back to trend. Final thoughts. Bottom line, I'm bullish long-term, but flexible short-term. If we go up, I deploy capital safely. If we go down, I attack high-quality setups with patience. That's how you stay consistent in volatile markets. If you found value here, hit the like button and subscribe for daily market updates. I'll see you tomorrow after the Fed decision.